Guys, welcome back to the channel. Today's video, we're going to be looking at 8 financial tips for young adults. So if you're in your teens, if you're in your 20s, even early 30s, starting right now, the younger you are, the more you can save and the more it is going to grow. Now, crazy enough, guys, in 2022, only 23 states require a personal finance course. That is right. We can add Michigan now to that list. They do require a financial literacy course with a half a credit hour, which I think really does not do justice by any means to really teach everything you need to know about credit, about borrowing, about repayment, about everything that you need within a very, very small amount of time. But you need to know managing your money, applying for credit, staying out of debt, really taking your time, learn a couple basic rules that will help you for the long run. Starting an emergency fund. We always talk about this all the time. Starting with that emergency fund and also starting the earlier you can for retirement. So let's get into the tips. Number 1, paying with cash, not credit. Now, it is good to have credit to establish good credit behaviors early, but this is really where it starts, guys. Exercise patience, self-control with your finances. If you can wait and save the money you need to buy something, paying either with cash or with a debit card, it is really a game changer when you get in that state of mind. It is the point of learning to budget. You know, a credit card is a loan that accumulates interest. So when you're borrowing money on your credit card, you not only pay for the item over a set amount of time, depending if you pay it off every single month, but if you don't pay it off, now you're paying more for that item if, again, you're not paying it off in full. Credit cards, when used correctly, are an amazing tool to build credit over a longevity, because if you're starting with a credit card, let's say when you're 18 and you're borrowing, let's say, a very small amount, paying it off every single month, your credit score is going to improve drastically because you have a good payment history and also the capacity on that card is staying high versus just paying everything with credit. I feel like, or with cash, I feel like the earlier that you can do this, the better you're going to be. Number 2, educate yourself. When you look at books on personal finance, the psychology of money, even looking at YouTube, looking at a lot of social media, knowledge can never be taken away, regardless of what you do, guys. Don't let anyone take you off track, whether it's significant others, whether it's your family. You always want to educate yourself and you want to be better, making sure that you're doing all of your research. Financial planners, mortgage lenders, accounting, before you utilize any of their services, really understanding what they do and what is the cost associated with it. So if you're going in for a service or an item, what is the cost? What is it actually going to cost you? Interesting enough, a lot of people say, hey, when you get a TV, what's the cost? Let's say $400. That's not the true cost, because when you think big picture, what is it going to cost in promotion, in time, in education, in learning? That you're spending utilizing that TV, probably going to cost you a lot more than the $400 that you think. Number 3, learning to budget. Now, this is really one of the biggest points that I really stress within this channel, guys. Really learning to budget in personal spending. You have to spend more than you earn. I know it sounds like that is kind of common sense. Tracking your expenses, like looking how much you spend on coffee, can really provide you a big wake-up call when it comes to finances. Small changes in an everyday expense that you can kind of control your impact, your situation. But looking at the larger items, when you look at rent, when you look at insurance, when you look at your auto loans, when you look at credit cards, where can you get things cheaper that provide these similar goods and service when you're not spending as much money? And again, really learning to budget. That education piece is huge. The number 4 is the emergency fund. The mantra in personal finance is pay yourself first, which means saving money for the future, saving money for an emergency fund. If you get used to doing this very, very early, literally, you will change the entire trajectory of your life, guys. So let's say, again, you start a job at 18, you put away 15% of your funds into a 401k plan, and you carry that on for the next, let's say, 30, 40, 50 years. You're going to have a absolute stockpile of money, guys. If you can keep that up, just living off the 85% you still have left, which is very, very healthy, living in that budget, making sure you're saving money. This will unlock the power of compounding interest. Now, we've said this a lot of times, guys. The power of compounding interest over years is exponentially just insane. Which brings us to number 5, saving for retirement now. The sooner you start saving, when you start in your 20s, again, that compounding interest. Not only that, is looking at company sponsored retirement plans, getting the pre-tax dollars, getting the match in the 401ks. If they don't offer it, you can also look at IRAs. Now, with those guys, I do not recommend keeping those funds into financial institutions. When you look at, your Chase, when you look at Bank of America, Wells Fargo, even when you look at your credit unions, they do have IRA accounts. However, they are not invested in the market. And that is really one of the big things, guys. You want something that is going to be, invested in the market, whether it's ETFs, whether it's stocks, whether it's bonds, whatever it is. You want something that is invested in the market because you're going to have an incredible amount of time to allow that to grow. And if you're doing pre-tax dollars, which again, there's a whole controversy between the pre-tax or after-tax, if you should do a Roth or traditional. Not going to get into that right now, but definitely do your research. Brings us, of course, segue right into monitoring your taxes. So when you start getting a regular paycheck or rather income, you're going to be paying taxes. So there is a difference between the gross pay and the net pay that you have between those two, kind of the pre-tax or the after-tax as the way it's looking. So if you're having an annual salary of around $35,000, you'll net around $28,000 after taxes. That is right, guys, around $2,300 a month on a $35,000 salary. Depending where you live and what the cost of living is, could be kind of crazy, out of control. Now, when you look at that 15% that we're putting into the 401k or the IRAs, you actually have a tax advantage on that as well because those are pre-tax dollars. So you're essentially your taxes are going to be a little bit lower because you're putting money into those pre-tax dollars. Now, number